Esoteric Discussions, a show that gives a voice to the hidden and unspoken aspects of our world, tackling topics in the realms of the metaphysical, the esoteric, the political, and social. So now join me, your host, Valentine St. Aubin, as I take you on a journey of exploration.
Good evening and welcome to Esoteric Discussions with me, your host. I am Valentine St. Aubin, and welcome to another show that I have planned for you tonight. So it is the 5th of June 2013, and it is, can we believe it, already June? I mean, can we believe it? This year is flying by mightily fast, I think. So, before I get going, let's set the mood, as I like to say, for tonight's show. Tonight we're going to be talking about the Euro Debt Crisis. This is a special anniversary show as well, because Esoteric Discussions is celebrating its 3rd birthday. So, it's going to be a relaxing show. And I've been wanting to do a nice show about what's going on in the financial side of things in our world for quite some time, but it's always a matter of finding the right type of guest to come on to share the information. So I'm going to use the opportunity tonight to review, because things are moving at such a rapid pace very, very quickly, and there's so many things going on with the whole debt crisis from month to month, and we can't always keep up with all the detail. So we're going to review what's happened from the beginning and what's going on now, and maybe focus on a couple of countries in particular to see what life with austerity is feeling like, because even though we are having our own austerity measures here in the UK, we're still on the other side of austerity. Obviously, if you live in somewhere like Italy or Spain or Portugal or Greece or Cyprus, you're having a different experience. So these are the types of topics that I would like to cover tonight. And my special guest that's going to be joining me in the studio is Pedro Goffe. He is a musician and artist, and he has been on the show before, but he's going to be joining me again this evening. But before I bring him on, I just want to review a few things, because we've had quite a lot of movement going on up in the heavens. We've got, we've been experiencing the Uranus square Pluto alignment, and we had another hit in mid-May. So if we look at the situation going on in Turkey, for example, we see revolution going on in the streets, and that's very much a Uranus square Pluto effect. We're going to be seeing a lot more of this. Many countries, many people in different countries uprising more and more. It's going to be a slow progressive step forward as we move through these next few years. Because, many of us have been talking about this shift that we're in, and this is what the shift looks like. It looks like this. It looks like the way that we have been used to doing things coming to an end, and new ways, new questions being brought forward. So, we're not leaving the planet. We're not going anywhere in that respect, but we are having an inward look at ourselves, whether we like it or not. So our systems are breaking down. Things that we've been used to working in a certain way are no longer working in the way that we have always expected them to do so. So this is what the shift looks like, and it's going to be with us for quite some time. So these are still early days, as I like to remind people. So even though we're seeing people on the streets and they're not really gaining any traction, I mean, if you've seen the images from Turkey, people being shot at with water cannons and tear gas being thrown at them and things like that. Obviously, it's quite detrimental to be stuck in the middle of that. But more and more people will begin to rise up. So these movements and these protest movements won't be easily squashed as they currently are as the years progress. And some good news, depending on what sign you might be. We're coming to the end of Jupiter in Gemini, and we're going to be moving into Jupiter into Cancer from the 25th of June. So that's good news for you if you are a Cancer, or if you have a Cancer moon or ascendant or Venus like myself. You will be experiencing some good luck because Jupiter is a beneficial planet. It's known as a good luck planet. And life will open up, doors will open up. So you have 1 year to try to bring in those dreams that you've been tossing about in your head for the last few years. This is the time. So make sure that you use this time appropriately. And for those of us who are Geminis, well, we've been having our year of doors opening up, opportunities, trying to do things in new ways. Hopefully you have used the time in a beneficial way as well. So that just wraps up my little intro. So I'm going to open up my mic for my guest, and Pedro is in the studio now, and just say hello to us, please.
Hello, everyone.
Welcome to the show.
Thank you very much, Valentine.
Thank you for coming back on. And
it's a pleasure.
Yeah, well, it's always good to talk to you, and we're going to have a great conversation tonight about some serious issues, but also some social issues, aren't we? Obviously.
Yes, I'm going to try to focus on a lot of hidden type of information and try to link quite a few dots in this whole European debt crisis and financial affairs that really they do cross boundaries and cross country, even continents actually. So it's all about models and things like that. But we'll go into it in a little while.
And before we do, I know you have your guitar with you, which is sitting in front of me.
Yes, it just disappeared.
It just appeared. And what I'd like you to do is maybe just to because this is also a celebration tonight of esoteric discussions as well. It's a birthday, little birthday party for the show. So, I mean...
Esoteric discussions.
So I'd like to have a bit of music as well and do something outside of the box and a little bit different to how I usually do the show, and have a small little party, as we might like to say. So would you play us a song to get us going here tonight?
Yes.
Okay.
I shall.
Well, I will hand over the mic to you. It's all yours.
Okay, so this song is called Paredes. Paredes means walls, but it's actually really after a famous Portuguese guitar player, an artist that has passed away quite a few years ago. But nevertheless, his name was Carlos Paredes. So this song is called Paredes, and it's sort of not necessarily inspired, but it is somewhat inspired in his music. So some of these sort of constructs are similar to a lot of the things to do with a Portuguese guitar. Okay.
Excellent. Thank you very much. Nice way to open up the show. That was beautiful. Thank you, Pedro. Thank you very much.
You're welcome.
So if you don't know about Pedro Goffe, you can check out his website. He's a very talented musician and artist, and he's also a very intelligent man because he can speak about a wide range of topics very intelligently.
When I'm not working, I'm very intelligent.
When he's not working.
When I'm not on my 9-to-5 job, I'm very intelligent.
Well, we all have to earn a living, don't we?
That is true.
But tonight you're here. I mean, you're going to probably play another song for us later on, but you're really here to get going with talking about what is going on in the world, in the financial world. And I think maybe the best place to start is to go back to the beginning and maybe think about, if we can think about how this whole debt crisis situation happened in Europe. Let me just read. This is just some very quick text about what, just a review as to what did happen.
Mm-hmm.
I mean, we had the global economy, it basically started to experience slow growth towards the end of 2007, going into 2008, with the whole situation that happened in the United States. And what we soon found out was that there were fiscal policies that were basically unsustainable within the banking sector and things like that, which caused quite a bit of corruption and toxic debts, as I think people like to use that type of expression to express what's been happening. And then from about 2008 as well, that spilled over into Europe, with Greece sort of coming forward and saying that it was in need of financial help because it had overcooked its books and needed a bailout. So, I mean, now that's really simplified. Obviously, just within those small few words, there's a lot of information as to how this all began. But from your perspective, because I know that you really have your head screwed on and you really do understand how all of this works, how would you explain how this whole financial collapse began?
Right, this whole financial collapse really started with a domino effect. I would like to open this statement with a sentence about Glass-Steagall. Now, actually, there's a certain movement going out there to try to restore Glass-Steagall. And Glass-Steagall, we'll go into it in a little bit, but it's one of the things we'll be looking at in a second. But the whole thing is really about veils of deception and egos, and control and power. Of course, that's nothing new in terms of power and control. Have always been there with us. So if I could perhaps just quote Henry Ford in 1922, he said, "It is well enough that people of the nation do not understand our banking and monetary system, for if they did, I believe there would be a revolution before tomorrow morning." Now, this illustrates quite clearly the egos and the matrix of powers that exist out there. Also, for instance, Henry Kissinger in 1973 said, "Who controls the food supply controls the people. Who controls the energy can control whole continents, and who controls the money can control the world." So basically, this just goes to explain the mindset that people up in power and seeking further more power come from.
Mm-hmm.
Now, as far as the financial collapse itself, basically, there's been a move from the traditional ways of basically trading. And the whole thing really started probably back in the 80s, where there was a decoupling between investment banks, the way that they would normally traditionally work, and the new ways of generating money through the same banks. So banks became gigantic, became bigger, salaries got huge, and of course the level of normal salaries for the ordinary person, there wasn't basically part of those new computerized systems and of high frequency trading and all those type of things.
A lot of these banks
became flat.
They had regulations that they had to adhere to, and from what I understand, those regulations were removed in the 90s. Was it the 90s that happened?
That was it's basically you take a little bit as you go,
step by step.
But basically, this is where we now get to the Glass-Steagall.
Mm-hmm.
Now, the Glass-Steagall basically was a provision. Basically, is what was a set of regulations that very much like a large boat is compartmentalized all the different risks. And as soon as you're starting to take as like a big ship, you have those compartments that if one compartment is flooded, then the whole ship will still continue afloat because you just close those doors, and it can still float with a flooded compartment. Now, in terms of regulations, the same thing. If you have those regulations in place, they will keep the ship from sinking. Now, as they started to take regulation away, because banks, of course, they always complain about regulation. Even Boris, our mayor of London,
Boris Johnson,
complained that the banks are far too regulated,
yes.
And that goes across the board in terms of private companies. They don't like governments, so to speak, or even regulators to come into place and tell them what to do. So that plan has been so successful. They've managed to basically remove all the regulations, or pretty much all. They still say that the banking industry is the most heavily regulated in the world. Well, it is for the people that work in call centers and work at the till and things like that. But but they have their loopholes in the right places by actually removing, as I was saying, Glass-Steagall and further other regulations, and basically this enabled the whole ship from having those compartments any further.
Because we had Enron, didn't we? That was quite an important player because when all the stuff hit the fan with Enron, it wasn't one of the first type of corruption situations with big business, but it was quite a damaging one, I would say.
No, the Enron was one of the first companies parted in the 80s to really show that there's another way of making money. So almost to the extent that you don't like some other companies will go in a second. That almost like you don't have to have products to make money. It's all based on speculation and sort of market products, synthetic products, financial products.
Yeah.
Yes. And so the Enron, for instance, there was a company that grew very quickly. They were making $100 billion a year. And that company was, for instance, headed by Jeffrey Skillen and Kenneth Lay. They both ended up in prison, and one actually died. I don't know if he was in prison or outside prison, but nevertheless he died as well. And countless managers and top executives were put in jail because they were basically just they invented the term price to market and or mark to market. That's what it was. And basically that they started to massage the books or cook the books. So basically they would basically log as profits expectations of what profits would be. So before profits were actually profits, as in any business, you have to see what comes in first, and then when it comes in, that's a profit. And they would just estimate how much a certain business transaction would look like and book it as a fact. Of course, the whole thing started derailing many years after. So basically, up to the moment that everything was solid, or apparently solid, Kenneth Lay was so adored in terms of the business community, that was brought in to be Bush's advisor to actually select Bush's part of the cabinet, George Bush I'm talking about, in charge of energy, so part of the energy department. So that's how important he became. He's just like the man that could do no wrong. They had the magic touch to make money. But of course the whole thing collapsed. Quite a few things stemmed out of that, which is business models. So, for instance, when you rate performance in a call center, or when you rate performance in big companies, that performance-related survey or assessment. That started with Enron. So basically, these formulas continue, the models continue, but the gangsters got put in jail. So the models don't disappear along with the gangsters, which is unfortunate. They'll continue, but the heads fall apart. And this is very damaging to some extent. But for instance, so Glass-Steagall was one of them. Then, of course, we had the Financial Services Modernization Act. And I, of course, all of these things were in the States, but what happens is a lot of Europe looks at the States for these models,
and then they incorporate.
And then they incorporate because because the markets are bigger. New York Stock Exchange is bigger than in Spain or whatnot, so they all copy. So it's important to have these things understood. So the Financial Services Modernization Act in 1999 was also called the Bill S-900, which was also called the Gramm-Leach-Bliley Act. And this removed the whole entire Banking Act of 1933.
Wow.
Okay.
The whole
entire act. Also, there was something called the Bank Holding Company Act of 1956. Now, this was prohibiting securities and insurance and banking to be mixed in within the same company. Okay. Now, once this was, and this was actually the situation with Citigroup, that this was abolished. So from that point on, you could really mix things up. And of course, this is the period where you start to look into derivatives. That's when the derivatives start to show up as these new sort of products that are novel and are basically the magical formula to create growth.
And you use that
and
word,
wealth.
You use that word derivatives, and we're hearing these terms derivatives, when we're talking about this whole debt crisis. But the average person has no idea what is a derivative, and why has that helped to make markets collapse. So please explain to us what a derivative is.
Well, a derivative, in simple terms, is basically a synthetic product. Okay, so it's an artificial product that basically, by that means that is in cyberspace. Okay, in which many things can be attached to it, and many investors can also have the same investment in it. So it's a bit sort of a complex thing to explain.
Well, because they keep messing around with the concepts, don't they?
But that's what it is. It's something that's in cyberspace. It's a byproduct of securities, for instance, and that's what it is, basically.
Okay.
But for instance, as an example, you have CDOs and CDS. Credit was called, for instance, credit default swaps.
Yes.
Or collateralized debt obligations. Those things are all derivatives. Derivatives is, for instance, when you take a loan from a bank to get your house mortgaged, and without you knowing, the bank is selling off your mortgage to somebody else, and that somebody else to somebody else, and somebody else. Before you know it, you have 1,000 people, 2,000, 2,000, 15,000, 20,000 people owning your mortgage, but you don't know. Because it's in cyberspace, it's in those derivatives, synthetic, artificial products. And that's why, because from the moment this matrix gets internationalized, that's when the domino effect starts to be at the potential risk of a catastrophic failure affecting everyone worldwide, or at least at a greater scale.
Yes, because this concept of credit default swaps, I mean, again, when you are listening to supposedly experts talk about what's going on financially, they say, for example, Germany has to buy up so much of Greece's debt, and all of these economies are finding themselves in limbo because they've all been buying into these credit default swaps, swapping the defaults on the balance books to hide the debt, to move the debt around. And that's why, as you say, and I guess this is the way that I understand it as well, it's just a matter of one piece being removed for the domino to collapse. And I guess this is what happened in America. I mean, I know people get quite quite confused, but I suppose this is the easiest way to explain what happened in 2007, 2008 in America with the housing situation there. Obviously, those types of derivatives that you were saying, those types of financial products just went out of control.
See, the bigger it gets. If you were to see a graph, if you remember the graph with the CO2 emissions, with
Gore.
Yeah, Al Gore.
Yes.
It's a similar thing, salaries and everything stayed at a flat line, and the graph going up for CO2 is the derivatives profits. But it's a decoupling, extreme decoupling from the reality. So it created an artificial world, and that's what's happened. Even, for instance, to the benefit, of course, it created great wealth. We're not denying that. It created a lot of wealth, but at a risk. But it wouldn't have been bad at all if there were regulations that had continued and perhaps coupled with stress tests and risk models to accompany these new products. But what's happened now is these stress tests and risk models are not in keep with these products, okay?
Yeah.
And that they cannot control it. So basically that's really what happens. The thing we also need to talk about is securities, because all of these derivatives and everything else, it all comes also part of these securities,
Is that the same as bonds?
Securitizations.
Oh, okay.
Securitization. So it's all under the same umbrella. And what happens with this is that from the moment that you create all these particulars, which is all to do with insurance as well. And as we look at, for instance, at the case with the AIG, so basically you had a lot of mortgages, because the whole thing really relates to mortgages. It was not so much because people were taking mortgages they couldn't afford. This is what they want us to believe.
Oh, well, that's
that
what
people
really used to annoy me.
living beyond their means,
yeah.
and people couldn't...
And trying to blame it on the small, poor person.
The whole thing is his fault.
Mm-hmm.
Well, what people need to find out is all these mortgages were basically contributing for insurance funds to protect them against any risks. But the companies like IAG that later were bailed out to the tune of, hundreds of billions, were actually spending the money, not putting the money aside. And what happened when then the whole thing collapsed, the money wasn't there for protection. So it did collapse and had the knock-on effect that it did. Mm-hmm. Also, of course, a lot of those mortgages this is very important, were underwritten by government. Mm-hmm. So much that the American government was actually actively giving out or offering the option to get into mortgages for exactly those people that were more at risk. Because banks were selling these mortgages at high risk, they would benefit from greater bonuses for themselves, the higher the risk the person was. Okay, so by selling mortgages to people, what they call the NINAs, no income, no assets, also when they came up with the government-sponsored enterprises, GSE loans, which basically put about $200 million in these companies' pockets in 10 years. Okay, at the same time, also put $440 billion towards mortgages. These are all government-backed mortgages. So the private companies that were involved in this, some of them that got special charters, to be backed, private but backed by government, meant that if these mortgages were ever to fail, none of these private companies could be responsible for it, because it's backed by government. If it fails, the government will pay for it. Mm. So it was a really good, really nice scheme. And this is economic growth, because it's the entrepreneurial Ellen Sugar type. Mm-hmm. Get it sorted. Mm-hmm. Let's make money fast. Yes. So that's what these companies did.
It was
who lost?
The too big to
the
fail,
state lost.
The too big to fail attitude, and as well as in the examples you've been giving, also with banks too big to fail, with companies too big to fail, with,
mm-hmm.
but,
and then from
but for the small person not too big to fail.
Because
we can fall.
That's right. Because the point then after the whole thing started to collapse and really appear serious, then is all the rats before abandoning ship. Mm-hmm. They start to putting that little baby face
say, "Oh no, help me, because we are so fragile."
Certainly couldn't.
People couldn't lose their
Electric
jobs.
Or all these other companies.
So yes, that's right. So for instance, you've got the motor industry. For instance, the motor industry in the States, according to a lady called Megan McArdle, for instance, this is all referenced, by the way. She says that the motor industry got about $100 billion, towards getting cars continued in manufacturing, so people wouldn't lose their jobs. But according to her, it would be easier to give £100,000 to each person that worked at the factory than just putting the money in the pockets, and obviously didn't actually make much difference. We cannot forget, for instance, the cash for clunkers. They was just giving out money. There was $1 billion spent on that in 1 week. $1 billion in 1 week spent in cash for clunkers. In Germany, similar thing, $7 billion for cars that were just over 9 years. So you could trade your car for a better one, for a new one, as long as it was over 9 years old. I mean, this is talking about recycling or talking about making the use out of what you've got. No, I mean, in this situation... So there was a lot of people making money.
But I suppose their argument was that they were trying to resuscitate the economy by trying to get people to start spending again after the whole credit was sort of basically stalled. And obviously credit still isn't moving forward the way that it should be, which actually can bring us into a very good point, which is...
Of course they would say that, wouldn't it?
Well, they would say that, yes. But, I mean, what are your feelings on this idea that none of this really needs to happen in terms of what's happening in Europe, for example? I mean, it's now, this is, and let's be clear, this is becoming a global situation. This is not an American problem. This is not a European problem. It's now becoming worldwide. Credit has slowed. Borrowing is becoming more difficult for the average person and for business owners. The only people that seem to be getting money are again, the big businesses. But, I mean, what are your views on the idea that the individual... The individual is the one that loses out, because big business can borrow money, but we can't.
Depend on the individual. If you're talking about Kenneth Lay at the time in the 80s, he is the individual. He's not losing out. So it's the small fish, the people is differentiated from corporate executive positions. It's basically the survival of the fittest that we see now. Mm-hmm. And of course, the powers that be are not really troubled by that. For instance, another quote by Alan Greenspan. He says that basically, there's someone quoting Alan Greenspan. He says, "I was really terribly worried. Alan Greenspan explained to me there wasn't a need for law against fraud, because if a floor broker was committing fraud, the customer would figure it out and stop doing business with him. So no need for regulations, because the customer would just figure it out." Yeah. I mean, this is obviously trades thousands of miles away. If you have funds somewhere, like for instance with MF Global, if people have lost money with that company that went down, they were just a brokerage firm trying to be an investment bank. If you had money in there, how would you, without regulations, how can you stop a broker, a floor trader? So is Alan Greenspan making things too simple in favor of not having regulation? And this is a guy that was adored in the 80s until the 90s, exactly, until very recently, as the magician of economy. Mm-hmm. Wrote books and things like that. But again, all in favor of their agenda of serving themselves. Because what we see here is feudal. It's a feudal system. The people out there making money are making money for themselves, looking after themselves.
And you used the term gangsters.
Everybody else is peasant.
When we first started talking, you did describe them as gangsters, and because I am aware of the time, we've got about 20 minutes left, and we will just take a break in the next minute, just for a bit of station identification, and get back on track with what we're talking about. But I mean, there's so much to be said here, and one of the things I do want to pick up on is Europe, because we now have. If we use this example of gangsters, we now have this situation going on in Europe, where European countries, because they can't just print easy money to get out of or to pretend to get out of their problems like America can or the UK can, that they're stuck under the umbrella of the ECB, the European Bank,
Central Bank.
So it's a lot different for them. So of course, countries like Spain and Portugal and Italy, Greece, Ireland are really in a quagmire because they are being forced quite oppressively to live under austerity. And we're going to just take a quick break, but when we come back, I want you to pick up on that side of things, because that's where we are now. I mean, it's taken 35 to 40 minutes to sort of give a background, and that's why I say this stuff goes really deep, because
I mean, if you
and it's moving so quickly, and I know many people just are not able to take in all the changes and everything that is going on. But if there is anything that they can take tonight, it's keeping in mind that this whole situation is not our fault. You know, it's these people's fault, and it's what you explained at the top of the show by saying they deregulated the financial systems and things of that nature. So this is now where we are because of their greed, because of what you were saying, the me mentality.
Yeah, that's right. And also, there's a gentleman called William K. Black. He was himself a regulator, and he's on record on inquiry commissions on YouTube. There's footage of that on numerous programs, and he's got a book out called "The Best Way to Rob a Bank is to Own One." And basically what he says is that there is no regulation and justice to actually imprison and correct some of these situations, or a lot of these situations hasn't been
addressed
near enough to correcting anything.
Okay, Pedro, we're going to take a quick break, and when we come back, we're going to pick up on a few of those points.
You don't need your radio or your PC to listen to Peterborough FM. Use your smartphone instead. Just use your browser and connect to www.peterborough.fm and click Listen Live.
Peterborough FM, the station that listens to you.
So welcome back to Esoteric Discussions with me, your host, Valentine St. Alban, and we're having a special Esoteric Discussion show tonight because it's our birthday. And, well, we have become quite sober in the studio, I think, because of the topic we are discussing tonight, haven't we, Pedro? But we are talking about what is going on at the moment in our world, and these are topics that Esoteric Discussion loves to discuss. The hidden, the esoteric is the hidden. That's the easiest way to understand the term. And in the respect of the show tonight, we're talking about the hidden within the social and the financial world that we're living in. And there's so many facts and figures and bits and pieces of information that just are not making the mainstream news. And it's up to you really to dig deeper to try to understand what's going on. Now, you have been spending quite a bit of time trying to give us the background as to how we got to where we are, and now I want to pick up on what is going on in Europe, because obviously we have this debt crisis. So what has Europe been doing to try to counter that, or have they? This is a good question. Have they been trying to counter what is going on?
Yes, basically there's the two opponent armies, the 1% and the 99%. From the 1%, which obviously constitutes all the wealthy people and banks and everything like that. So the system itself, okay, there are some fine rich people out there. They still having nothing against rich people if they work for what they've got.
That's a fair assessment, yes.
But what's important to understand here is that, for instance, let's start with an example from a Greek economist called Yanis Varoufakis. He's appeared also in several programs and everything else, but he's got a good example of how money is made. All starts with the troika. Okay, now the troika, some years ago, which basically consists of the ECB, so the European Central Bank, the IMF, and the European Union. Again, the European Union is interesting how we went from the European community.
Well, it was the European community, yes.
And now it's the European Union.
Yes.
But nevertheless, the Troika persuaded the Greek government to take, he says, look, we've got 5.2 billion euros for you, and you can keep 1 billion okay, to put towards hospitals and schools, pensions and pharmaceuticals, pharmacies and things like that, keep things going, in this hour of need. And the other 4.2, okay, you have to pay back the European Central Bank for some bonds, stress bonds that the ECB purchased from them in an attempt to shore up their price, which means to preserve their value. What happened was then the Troika broke the agreement at some point and say, look, that billion euros we said to you to keep, to put towards schools and hospitals and etc., actually we have to pay the whole thing back to the ECB. So they did. So this puts this idea that, Greece, they took money from the ECB, but they don't.
This is what they like to say.
But then the regular folk won't know that actually, or the idea prevailing is that they just squander money and they've given all this money.
They lived beyond their means. They were too greedy. They cut their books.
But actually, that money went back to the European Central Bank. And this is the curious bit. Basically, the Central Bank, because they bought those previous stressed bonds at a discount, okay, when they sold it back to Greece, they purchased back at full price. So the European Central Bank pocketed 840 million euros, okay, courtesy of a 20% discount. Yeah, so this is how you make a necessity, create the solution by giving the offer, and then you make a cut out of it at the same time.
And Greece also had to give hand over natural resources. Was it the IMF and the ECB?
That was the other situation where Goldman Sachs came in, again with derivatives, trying to hide the Greeks' debt, so parked the debt in a different place using derivatives, all these scams. Well, the thing is, it's not scam as such, it is an opportunity. But it depends what side you're on.
Well, opportunity for them to make money and rip people off.
And depends where your morals are. And this is where, this is where it's interesting, because their argument, if you talk to Goldman Sachs, it's JP Morgan, those big investment banks, it's always the same. You knew what we were when you came to us for help. Right? So from this perspective, I have no problems at all. Now the problem is that the Greek people first didn't have a choice. They weren't given the total information.
Sure.
And the presidents or the ministers that were involved in these decisions probably weren't even made aware of what they were doing either, fully.
Yeah.
Okay. What's happened, they've hidden the debt, made everything look like they were perfect, in terms of the books. They were balancing the books again to meet European standards, because there's a treaty called the Maastricht Treaty,
yes,
where every country needs to be self-sustained in terms of meeting their debts, on their own, without overspilling any problems in terms of that.
Yes.
And so everyone is breaking that treaty, pretty much.
Did they not change that treaty to where European countries had to be in a position to bail out other countries? Didn't they change that?
Well, I'm not too sure about that. But nevertheless, they fiddled the treaties even, if possible, just to make everything rosy in terms of continuing to make and generate fees amongst themselves.
Yeah. Well, because I know that you have an interest in Portugal, and we all, the time has just flown by.
No,
but I wanted to just ask you, from your point of view, because obviously you have an interest in Portugal as you are Portuguese, what is life like for the Portuguese currently during these years of austerity?
It's very difficult.
How bad is it?
It is very difficult. Basically, very quickly, by 2012 figures, there were less 900 million euros used via debit card payments in comparison with 2011, so the previous years. In other words, this equals to 539 million less euros in the economy, which means in the whole 12 months of 2012, Portuguese people have withdrawn 369 million euros less than in the first 6 months of the previous year. So there's less money about, and people obviously are spending less.
And this is because the banks are tightening up lending and the money supply.
It's because salaries are in arrears in many cases. People have lost chunks of their salary, in essence.
And that's not something to just breeze over. Let's think about that for a minute, because we think we have it hard at the moment here in the UK because people aren't having pay rises.
Let's say over here that let's say that you've got a Christmas bonus.
Okay, now see that's something that's part of your salary normally. It's like an acquired right, an inalienable right. This is what most Portugal had for many years, at least since 1974, the 25th of April, the revolution, and everything started to be reformulated. So those inalienable rights were set. So everyone got a Christmas subsidiary and a holiday subsidiary. Now, one of these subsidiaries, okay. Actually, there was another one, which is the 13th salary. Now, the 13th salary is no more than an adjustment for salary that you didn't receive throughout the year, because as opposed to typically in England, people are paid weekly. And the way that they traditionally do things over there, people are paid monthly. So for some reason, there's an adjustment, and you get that as lump sum. They call that the 13th salary. Now, imagine that has always been accustomed to your Christmas bonus, having that disappeared. So that's what it is. So a lot of Christmas bonus, all the summer subsidies and Christmas disappeared, all that disappeared. Also, VAT has gone up to 23%. You see, for instance, that there were 24 women murdered to domestic violence in the first 9 months of 2012 versus the same number for the whole year, the previous year. So this really speaks very highly.
Yeah, well, it's affecting people mentally. It's affecting the social fabric of things.
That is correct.
Mm-hmm. I mean, we've had the suicides in France, for example, in Spain as well. So obviously we're seeing those things there in Portugal as well, I assume. And
also a very human aspect here is, for instance, they're changing a lot with rents. A lot of regulation to do with rents and everything like that. And for instance, there are a lot of older people that they pick these things very late, or they're not quite, at that age where they can understand things. They're having heart attacks because they have like bailiffs and people knocking on a door out of the blue,
demanding money,
and it's very, very, very sad. They have, for instance, one thing introduced recently called the solidarity tax. Now, this solidarity tax is not applied on wealthy people; it's just applied to people on minimum wage.
Yeah. Well, this is the thing that's happening, though, isn't it?
It's that sort of opposite truth again.
But this is the thing that's happening, and we're seeing it in the UK as well. It's the small person, the person that doesn't have very much, who is getting beaten up with the austerity measures in the UK. People in council properties, for example, if you have an extra room, now you have to pay a room tax, and they're just pulling these things out of the.
But look, if you were a bureaucrat with a ministerial position in the European Union, or a person in investment banking, making typically £600,000 a year, I just heard someone say, well, that's not very much. Maybe it's decent. Well, the thing is, they've got cash bonus of 15 million on top of that, and another 15 million on sort of stock pay. So all of a sudden, you're not just on 600,000 a year, you're on 38 million. Mm-hmm. I mean, for instance, guys, if you look Lloyd Blankfein, for instance, CEO of Goldman Sachs, is on $54.4 million in 2006. Okay, so that's pretty good, right? Mm-hmm. And this is across the board.
Whereas most people are losing their income, their wages and things.
Whilst in the 80s and 70s, you had... And before that, you had key positions in investment banking earning $60,000 a year. And the bank itself had perhaps about 100 people, okay? And they were living, reasonably well. They didn't want to own the world, or the moon and like they do now. Now, they earn this sort of figures, okay? And these investment banks hire entire armies, of 20,000 people or more, And obviously they are spread across the world as well. So you could say, but they are provided employment. Well, that's not the point. The point is in terms of, from a libertarian position, it would be best to have those 20,000 people employed throughout several banks or several other jobs than all under one roof. Because then it's that corporation fascism. It easily creeps in when you have one single entity in control of a mass of people.
Well, that's actually the key word, and a good way to sort of... what I would just like to quickly say, because I know you want to add to something, but this is what they do talk about, isn't it? People like Max Kaiser, people like Joe Salente, that what we're living in now is no longer democracy or capitalism as we know it. It's corporatism. It's the big business is now in charge.
And there's one thing I would like to finally just touch upon is something called the London Agreement of 1957. Now, very few people know this. This is basically an agreement that was set in place for Germany to pay back debts to a lot of the countries in Europe. namely the US and the UK, Greece inclusively, Spain and many other countries, Ceylon, Canada, Denmark, etc. So basically, they were given a time period to pay back the debts over a certain period, and they were forgiven half that debt, and they said that the rest of the debt you can pay when Germany reunites. They did. So when the Berlin Wall came down, they took 2 bonds to pay debts. It wasn't to bring the standards up to scratch with West Germany, you know what I'm saying? So East versus West, bring all the standards of living up to the same level. It was to pay the debts. So they could recover from 1940 after the Second World War, recover and have time to rebuild. The same type of deal of agreement should be made with Greece and countries that are trying to recover when they cannot pay anymore. So they need that space, so they need to at least 30 years or so to recover, and that should be held on standby until they can actually
So is this what you're
pay.
saying that Europe needs to have, is something like that?
It's something similar to the London Agreement Act of 1957.
And if we don't get something like that, what do you see for the future? In just a couple of words.
Well, it's going to be very difficult. It's basically is either continuing to borrow, or some countries will then set the trend by default, by exiting the euro and perhaps try to show a different way. And that's the only way that maybe for other countries to follow along. But the instinct now is to hold on to the typical traditional models.
Okay, Pedro. Well, thank you so much for joining me this evening. We are out of time. But thank you so much for joining me on this special edition of Esoteric Discussions as we celebrate his birthday, but also, well, it was a somber conversation, but a much-needed conversation. So thank you for listening. Thank you, Pedro, for joining me this evening. And I'll have to have you back at another point, and we can continue on because so much to talk about, isn't there? Anyway, guys, yeah, thank you anyway. And as I always say, until next week, guys, keep your eyes on the stars. Coming up next is The Flip Side, and they'll be bringing you all the latest reggae tunes. But bye for now.
Peterborough FM, one station, many communities.